Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 4 consecutive days, the Australian dollar has retreated from this trend line, which was around 72 figure 20. And from the decline has taken out the 60-day moving average at 71.97 or 96. And also the MACD has broken down somewhat, and the RSI is not too far away from the both indicators to marry up and to support a bearish outlook. Triggering the fall today was the RBA Governor Phil Lowe speaking earlier, saying that potentially there could be an easing coming very soon. That would be on the 3rd of November, which is Melbourne Cup Day. It was what last seen a decade ago when they last cut on that day. So they have hinted. So no doubt on that day, along with the US election, it's going to be a very, very challenging start to that week. Nevertheless, the sentiment is bearish for the Australian dollar, and let's see if the market can continue on with the bears focusing on the region of 70 cents. But we do need confirmation from the MACD to line up this call and to support it to eventually reaching its target. Looking at the euro, well, the market has been very whipsawed and posted a long-legged doji overnight. Nevertheless, the market is still somewhat breaking to a potential bearish case, and therefore from the MACD would also be in line that is with the RSI and look towards the region of 117 and lower, as the US dollar, which measures the greenback strength against a basket of 6 major currencies and weighted to the euro at 57.6 to increase in its demand, which would put further pressure on the euro. Well, as you can see, the challenge to the upside on dollar yen was quickly reversed, and with the RSI still holding to a negative case, the ADX still trending to a bear case, and the MACD just marrying up to the RSI puts further emphasis on the downside, with the call still at 104 the figure. Reassess from there. Initially though, we could find a little bit of support around 104.80, but overall from this pattern and from the 3 leading indicators does support this negative outlook. The pound very whipsawed and still maintaining in a slightly bullish case. Still, when you look at the RSI, wonder if the market can uphold any renewed advances. Therefore, could see the market turn back to the downside. Let's see if it does. But at present, I'm still neutral, as I'm still looking for a confirmation from these indicators, and I don't completely have that as of yet. Sterling, yen, well, the market, like the pound, very whipsawed, but since breaking the trend line, which is around 137.30, reaches partly to its objective of 135.80. Now looking towards the downside, can still see further weakness and look down towards the region of 134. But nevertheless, looking at these indicators, still would like a little bit more confirmation to give a further bearish call, as it is still very whippy. So continue to monitor your positions in terms of your risk management, and continue with stop losses and take profits in accordance to your trading. And that is in case we do get some unexpected moves due to the risk of the pound at present, as it comes up towards the end, or not too far away, for the divorce between the EU and Brexit. Looking at gold, well, since the market fell through 1,900, reached its objective of 1,883, rebounded but didn't sustain. The RSI is still under the midway point. Now, I do believe that we could see, and we should not rule out, one more test towards this bottom of the range around 1,880, and could actually see a further fall towards 1,850. The reason why is the market is very, very flat when it comes to these momentum in oscillators, and therefore could see this market drop. The recent advances have been very much lackluster. So let's see if the bears continue to weigh and sink their claws into the gold. And wrapping up with oil, well, the market staged a rebound, but not quite clearing that level of $41.80. At present, though, we are somewhat holding to a firmer case. Let's see if the market can continue on, but we need to clear $41.80 to support a rise up to $42.80 to $43 80 within the near-term cap is. And that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.